because these two types of trend lines are essentially what our expectations, our basic expectations of what the price action should demonstrate following the completion of a pattern. We have a primary trend line. That's a 45-degree slope. That's usually a slow, steady uptrend or downtrend marked from the terminal price bar. Now this is critical because this establishes at least some type of expectation for what that price action should do. If the pattern has completed and the price action starts to reverse, if that structure is really valid and going to give us a reversal, it should maintain some type of 45-degree reversal slope. The other type is the accelerated. This is a 60-degree or greater slope. After price action has stabilized and initiated a new rally or reversal from the completion point, the trend line that materializes after this consolidation marks an important reactive move that requires specific strategies to manage the profit. We're going to look at these expectations because we have different expectations for the primary versus the accelerated trend line. Now, if we're looking at a bullish reversal, bullish PRZ, immediately after we have the terminal price bar established, the ideal reversal will hit the numbers and then begin to exhibit some type of change of character where at least this primary uptrend begins to ensue. Now, what happens typically is we might see some stabilization. It takes a little bit of time where you don't have that immediate dramatic reversal, but shortly after that consolidation, after testing all the numbers and establishing the terminal price bar, then we might get some type of accelerated uptrend line. Now this is critical because this type of nature of the price action will help us in our trade management. We're also going to look at two reversal types today, and that's why these trend lines are critical, because depending on if it's a completion the first time or the second completion, a type 2 reversal, this is going to dictate whether we're aggressive in our profit taking or we're going to allow more time for profits to ensue. So here's an example of a bullish PRZ with a primary and an accelerated trend line. What we have is a completion point here. Terminal price bar is established. Now, if we were looking to execute, we would break this down on the approximate time frame, but for our purposes, just want to understand these two reversal types. As soon as that terminal price bar is established, typically I'm drawing some type of primary 45-degree uptrend off of that terminal price bar. But then if I see this accelerated move where we get kind of a sharper rally off of that 45-degree uptrend, I'm going to respect that. I will monitor that situation closely, because when I see some type of accelerated trend line reversal, that's usually an unsustainable move, and I'll usually look to take profits on the violation of this accelerated trend line, because although accelerated trend lines are sharp in nature and can yield quick moves, it's when they start to begin to roll over, they can't continue. That's when we want to capture these accelerated moves, and we'll look at the type 1 versus type 2 reversals of why these accelerated and primary trend lines are so important. But again, looking at this chart of the price action in the potential reversal zone, here's the terminal price bar. So no matter where that terminal price bar completed, I would draw a 45-degree trend channel, an uptrend channel, no matter what happens, off of that terminal price bar, because then as this is unfolding, we want to see price action steadily at least maintain this. If this gives us a pop and then rolls over, that's telling us that the price action is usually not going to give us much continuation, can give us an early sign of when to scratch a trade or take a small profit versus giving it more time. So again, we're going to look at the reversal types here in a minute. Looking at the bearish reversal trend lines, again, identify your terminal price bar. That's the first step. Then draw that primary, that 45-degree general downtrend from that terminal price bar, and look for the price action to exhibit that, especially on the approximate time frame. And again, we're going to go through a couple examples of how to break down the approximate time frame here in a little bit. But just look at these two time frames, but expect after a pattern completion that primary trend line is established and is maintained in that new reversal direction. Here looking at the Australian versus Canadian dollar, we got a Gartley, but let's look at the price action in the potential reversal zone. Actually, for this Gartley, recall from our identification webinar on the Gartley, we've got a rather deep ABCD here where the ABCD is above the 786. So remember, we're always waiting for that ABCD, but that's where the pattern's considered complete. So then just drawing that primary trend line off of that terminal price bar, then we can use this as a gauge to monitor whether or not this reversal will ensue and will yield substantial reversal or not, substantial move or not. But that's that 45-degree general expectation of how to look at it. Now we're looking at harmonic trading reversal types. It's really important to distinguish the type 1 versus type 2. Now the type 1, that's the first test of the entire PRZ after the terminal price bar has been established, and that's, as we looked at in that prior example, that shows us a type 1 reversal. As far as identification, we consider the pattern complete after that terminal price bar has been established. With these type 1 reversals, we want to coordinate the PRZ with the RSI on the proximate time frame. This is more important on the type 1 because when it comes to management, we expect to capture some type of quick reactive move and close the entire position on an accelerated trend line violation. Why? Well, a lot of patterns, most patterns, we want to have that built-in expectation that there will eventually be some type of secondary test. With the type 1 reversal, the first time a pattern's completed, that's really the true power within harmonic trading, where we get that quick, natural, reactive move. We identify the structure properly. That's why our identification rules are so strong and so powerful, because at a minimum that puts us in the right price level for that natural reactive pullback. But in most cases we see a secondary test, and it's very common that we have a secondary test of the PRZ after the type 1 reversal has traded beyond the potential reversal zone. So for identification purposes, we're looking for some secondary retest of the pattern completion point that in many cases will possess some type of smaller pattern within the PRZ. So we utilize the terminal price bar level as well, because sometimes, remember, that terminal price bar, it can exceed the PRZ, but we still utilize that as an additional level when we're assessing that secondary test. We want to coordinate the PRZ with the RSI on the approximate time frame and look at other smaller harmonic trading considerations, such as looking at a smaller pattern, like I said, that forms on a secondary test in the approximate time frame, analyzing maybe a secondary test of RSI, as we looked at with RSI BAM, divergence or confirmation. In many cases on the secondary test, that will be accompanied by some type of multiple RSI formation. Now, for the management purposes, we're going to give this more time. We're going to look to close the entire position on a primary trend line violation, but valid type 2 PRZ trades will experience that larger counter trend reaction, meaning we have to still apply the standard management strategies, but type 2 reversals represent more of a consolidation of the larger potential move. So if we see we're in a bullish PRZ, and here in our example, this is an example of Vale, which is a Brazilian petroleum company. For our purposes, this really might not look like a great chart, but demonstrates the reasons, the rationale, the necessity of our expectations that it happens in, I would say, many harmonic pattern setups, because it's easy to say, hey, patterns are great, let's just expect the home run situation in every case, but we know we can't. That's not reasonable. We will get those. We identify our patterns correctly. Yeah, those home run situations do occur, but for active trading and for active management, we get more opportunities. So in this case, we have a bullish 5-0 on the daily. Now here's the type 1 reversal. On our type 1 reversal, here's the terminal price bar with our primary uptrend, but after a brief consolidation, okay, that terminal price bar is established, we then see this accelerated move, this kind of quick blast out of the PRZ. Now, we're going to look at the entire trading management model here in a second, but I want to break this down simply in terms of being able to recognize these differences, where on a type 1 reversal, this is our quick blast. Our PRZ tells us and points us somewhere in this 31 to 30, 40 area. We're looking for some type of pattern completion. Now we would break this down, but looking here on the next price bar, this is the case where we're then looking at the next price bar. We're looking for this stabilization in this area 30, 40, and remember, we're utilizing our area just past the 618 as a stop loss, so our stop loss is probably under 29. So even though we required some consolidation here, what we're looking at is taking action on the next price bar after that terminal price bar is established. So that tells us requiring some consolidation, that maybe a permissible execution zone is slightly under that 30, 40, that 50% level. But at least we're in the 30 ballpark, and that starts us off where at least we're in the right area. We get some consolidation, although it took a couple of days. Finally, we get some type of move. Now off of this low here, from the lows that were established, we're looking for, this is the area where we're looking for some type of movement reversal, as long as our stop loss is not violated. So after a few consolidation days, then we get that quick up move. But this is a great example where this is the natural reactive move. That's a quick 10% bounce in a 2-week session. And let's look at that, the size of that pattern. You know, we're looking at a pattern here that is a year or a little more than a year in duration. So a few days relative to a full year is not a lot in terms of the amount of time we give it, and we're going to look at some time measurements here in a little bit as well. But on this type 1 reversal, this is when we get that quick accelerated move. But this is also where we are actively going to capture profits more quickly on a violation of this accelerated uptrend line. Because if we see this quick blast out of the PRZ and then begin to roll over, our expectation is that we want to wait for that secondary test. Usually some type of secondary test of not only the PRZ, but the lows, especially the terminal price bar low, that define the pattern completion point. Now,